Good morning, everybody. This is Dennis Warren with the Active Trend Traders for the How to Make Money Trading Stocks webinar that we do every Friday at 10 a.m. Pacific time. One of the reasons we do this during markets still open, one is you never know when an opportunity may pop up when we are on the webinar. And also it can provide a good planning process to go into the weekend. So thanks for joining us on the live webinar. And the two mics are away this Friday. Mike Traeger is looking for a turkey or something, and Michael took off and went to Austria. He just sent me an email and said he's just got to get away from this market. It's crazy. So we're Mikeless, yeah, exactly. So, but that's okay. We got some good stuff to cover. I want to remind everybody that all the materials we do present with the Active Trend Traders are for trading purposes only. And traders should always paper trade any new method prior to the risk of their own personal capital. And if Mike were here, he would want me to cover his disclaimer, which is required by what he does in, let's see, Switzerland for his business there as a financial advisor. For those of you who were able to attend the midweek market sanity check, I think that it was a good one, but secondly, the training in that is very much a focus on some refinements that we're making. It's one thing about being a technical trader. You're always refining. Not, you basically settle on a good system that functions and works, and then basically are there adaptations that need to be made. So if you have not watched the training webinar and you're a premium basic or an early warning alert person, you can go to the website and find this week. Well, actually not this week, but we're going to take this Wednesday off because it is Thanksgiving week. And but on December 2nd, we are going to get into game plans. Is yours working? And start addressing items that need to be either changed, tweaked, thrown away, that is keeping you from being as successful as you could be as a trader. Because that's one of the things that I am always after. I want people to just, learn enough fish so they can be successful as a trader. What are we looking at today? Here is what's going on. As we came into last week, I mean, literally, last Friday, it was a significant sell-off, and it looked like the market was setting itself up to just drop. And then we had the terrorist issues in France, in Paris, and the market rebounded this week, and so we've had an upside reversal, but we remain in a trading range currently on all the tracking indexes that we track. The S&P back into the resistance zone towards the top of the channel. NASDAQ, again, also back at resistance. I really like the Russell for a couple of reasons. One, I think it has the most potential for moving either significantly in either direction. Some of the downside with the Russell is if the Feds, as they, basically there's about a 65% chance the Feds will raise rates in December, around the December 15th, 16th, and 17th, I think is when they meet. And if they raise it, typically the small cap stocks, because they are, slightly newer companies and also tend to carry a little bit more debt, rising interest rates, even if it's just 0.25%, definitely affects their bottom line. So that's what I'm looking at for the Russell. Very interesting. Of the three, it's earliest, it is early in its breakout and run up to the upside. And so outside influences, there is always a tendency as we get into this makes the first week of holiday trading that will end, that will go through the end of the year. And so are we going to be set up for a potential Santa Claus rally? There's a tendency during this time of year for the bias of the market to be up at least. Question marks about rates. As you can see, the market, after they read the Fed minutes this past week, Actually, the market, rallied on that, and the expectation is, like I said, about 65% probability that the Feds will raise rates in December. Now, that may be celebrated initially going into the end of 2015, but what will be the ramifications in 2016, which we, at this point, all it would be is speculation. Then global instability and or stability. Is the global instability pushing funds over to the U.S. market, which is helping to prop that up? And also what we learned last week from Mike, on the weighted indexes, there was only like about 8 stocks that were actually holding up the those indices. Now, if those stocks start to show cracks, we could be in for some, for a little bit of spillage down to the downside. But at this point, they are holding up. And if they hold up long enough, I have seen it where the weaker stocks all of a sudden will get in gear, and it'll spurt forward for a nice, uptick or a nice move up on the indices. We'll see if that's in play this year. So last week on the percentage of stocks above the 20-day moving average is one of the indicators that Mike Traeger and I utilize with early warning alerts. This is just one of them. The rest of the indicators that we have are proprietary. We didn't really get a trigger for the early alert system, but as you can see, it was bounding down here. It had dropped hard. And so what has happened this week so far? Well, we basically got a rebound back up, and it's pushing, it's starting to act a little bit stronger. Does it mean the market is going to just, go through the roof? We shall see. One of the things that is very interesting also is that that's one of my alerts going off. NOAA is rallying up along with a couple other stocks. Anyway, what we're looking at is if you look at the longer term, go to barchart.com and go to the momentum indicators and pick out the percentage of stocks on the NYSE that are above their 200-day. That was the U.S. Marine Corps hymn, Dave. The stocks on the NYSE that are above their 200-day moving average, we're still showing that, there's more stocks below their 200-day moving average than above it. It was about, less than 40% are above the 200-day moving average. And when you take a bigger pitch snapshot of that, that tends to indicate that, okay, there's weaknesses in the underlying, or the, what's under the hood. Yes, there are some stocks that are performing very nicely, but you have to be very selective. It is definitely a environment where stock selection is critical, is absolutely critical. So where are we? Here's where we were last week, and we see that the Dow was down, the S&P was down for the year, Russell was definitely down for the year, and the NASDAQ was up for the year, but it had dropped from its highs. As about 9 o'clock this morning, I took another snapshot. Interesting thing, the Dow is actually now turned positive for the year, just by less than 1%. But the S&P added about 3% from last week. The NASDAQ added about 3% from last week, and the Russell is still the lagger, and coming in at added about 2% from what it was doing, what it had done last week. So let's go to the charts and take a real hard look at what we're seeing going on here. Here's the S&P. The S&P, a couple of things that we need to keep in mind is that, one is the S&P is moving back on the daily chart and on the weekly chart, but on the daily chart primarily into this resistance zone that was basically put in place early in the year. So there's resistance from about 2043 all the way up here to the 2134 level. There is minor resistance at this high where it made a couple of weeks ago. And if we push on above that, then it will start bumping its head. That isn't a buy arrow. That's just basically indicating to me that that my momentum indicator has gone back above zero, Scott. It's just a little refresher, a reminder for me. And so, but anyway, we're working in there. So what could be happening, what could go on with the S&P is very simple. It could basically just ricochet back and forth from this level up to this level, back down to this level. And it could basically, I would be watching if we do get all the way back up to this level and it does only a partial retracement and then rebounds. That can be a clue. That could be a clue that, hey, the market is going higher. And so we'll be watching that very closely. As you can see, this week's price action is almost engulfed last week's negative price action. So in a way that, not in a way, that can be in fact looked at as positive. A couple of things of concern though is one, on a daily chart, look what's going on here. The momentum on the daily chart is telling us that, yeah, momentum is slightly going up, but what's happening with prices? Prices is going up, more steadily and at a faster rate. But it's doing it in a low momentum environment. Same thing on the true strength indicator, which is also look at the slope here of this. It's very shallow. It doesn't have the slope of this move where it moved off its low back in September and resulted in this nice run. And so it's a little bit less, there's a little bit of less momentum or a little bit less oomph. And so, yeah, Scott, some people will, Scott asked the question, is this a divergence? So, it is one of those things of the art of trend trading, is that, let me get rid of that. Because the price is moving up higher, almost back to its high, and we're not getting this. Some people will refer to this as we have a divergent indicator, same thing over here, but it's not your classic form of divergence. And on the weekly chart, what I would say is that there's divergence between the daily and the weekly. This is looking weak, but on the weekly chart, this is starting to look like it's strengthening up, getting a nice little rebound here off the true strength indicator. But that's a nice, on a weekly basis, a nice rebound of things going up. And one of the things that kind of gave us a clue on this, and you never know until it's confirmed, is this bar right here. As you can see, it was higher than the week previous bar, but look at, this was a sell-off week. But the momentum on a weekly, on the longer term basis, was looking pretty healthy. Let's take a look here at the, there we go. Take a look here at the NASDAQ. Again, the NASDAQ continues to be the strongest of the indices, but it too has reached up into its resistance zone where we had the breakout, then a failed breakout, and now we're getting a retest back up into that level. If we push, and this is kind of a classic move that I want to point out to everybody, is we had this nice little, a series of higher lows. We break this swing high, and so that puts us back into an uptrend, and now we got a retest here at the 50 and a rebound, and which is telling us the uptrend is back in play, and we get this pullback here. While I don't necessarily, because we had such significant selling the last 2-3 days of last week, but regardless, it sold off to a strong level of support, and then it did its rebound. So we have it, like I said, series of 1, 2 higher lows, a higher high, And if we push back through this level, we could see this continuing to go up. The NASDAQ and the NASDAQ Composite is not very far away from its all-time highs made back in the year 2000. So well worth keeping your eye on. We could be set up for a very fun time of finishing off the year. Again, it too is showing, not a lot of momentum strength on a daily basis, although the true strength indicator is popping back up above the zero line, which is a positive thing. But the momentum on the weekly basis, it has been very significant. What we want to do is also double check, and I don't usually check. I check it on a daily basis, but on the webinar, I don't usually check this. But I like to go in and double check what's going on with the NASDAQ Composite, because it captures many more stocks than the NASDAQ 100. But the reason I follow the NASDAQ 100 is because the Qs emulate the NASDAQ 100. But as you can see, even when it pushed up to the highs of a couple of weeks ago, it had not broken out and made a new high for the year. The NASDAQ 100 had broken out and made that new high. So kind of interesting thing going on there. Then the other one we take a look at, and I'll just take a look at it briefly, is the NYSE. And the NYSE on a daily basis, it has gotten itself back up into the magic fib box. That's based on the move from this high down to the low for this low. And so it's working in this magic fib box area. It could move sideways in this, but again, its action for the week, very positive. But it too, if this is a higher low, it needs to take the NYSE needs to take out that high in order to be considered back in an uptrend. And then of course the Russell. The Russell, similar types story. It did move above this past high here, but the Russell has been kind of just moving sideways, and you can see the moving averages have been working very nicely for both support, and right now it's bumping its head up against the 100-day moving average. And then also we've got some very strong resistance up here at the 1198 to 1200 level, and just above that, of course, will be the 200-day moving average. But on a weekly chart, since it is a significant thing for when you've been in a downtrend and all of a sudden you start getting these closes above the 8-week moving average, we are getting another close above it, and so we can utilize that information to be a line of demarcation about the 1167 level for potential additional bounces. It is definitely looking more positive, but again, on its move up, for this week, the momentum has stayed low. We haven't really gotten a break, like this momentum move here has not happened over here yet. And so we'll see what happens. If we get a close back above the 1179, 78 to 79 level, it could mean that we've got more upside to go with the Russell. So any questions on the market, guys? Okay, hold on. Let me catch up with some of the comments here. Let's see, I'm long SPY calls. I bought on the pullback and they are up very nicely. Yeah, that was a good trade for you, Scott. And then Bruce, hey Bruce, how you doing? Stock selection is critical, as well as having a good trading system. Mentor missed earnings. Yeah, I was going to show Mentor as one of the reasons why we don't necessarily want to hold over earnings. It's one of the things I have preached for a long time, because it got whacked. I mean, big time whacked. So, okay, aren't there still more NYSE stocks making more lows than highs? Yeah, David, that varies a little bit. As you can see, Mike, brought on the big day up here, these 2 days here on Wednesday and Thursday, even though the market was moving up to a new high on the percentage, or not the percentage, but the ratio of stocks making new lows and the ones making high was like 7-to-1 on the NASDAQ, and it was like 20-to-1 on the NYSE. So again, that gives us a sense of what's going on in the underlying. However, there are still stocks that are moving up very nicely, and actually we jumped into a couple of those this week. In the issue of NOAA and CBM that we'll address a little bit later. And then of course we got a nice little follow through on YY on the earnings trade that will be reporting on Monday after market close. And so that was definitely a patience trade, and we had to change some of the exit points to take what the market was giving us. So we got out with a nice little profit on part of the position. We'll see what happens on the remainder of the position going forward. We've got to close. We're getting a close. It looks like we're going to be getting a close above the $60 level, and that's a critical level of what was critical level of resistance is now turning into hopefully a critical level of support. But I'll be out of that trade by Monday. Before the market closes. So let's get back to where we're at. Okay. So path of least resistance. The path of success is never a straight line, and if you've been trading in the market for any length of time at all, you know that stocks go up, stocks go down. Some trades are losers, some trades are winners, and we try to put the edge in our favor by following a good, sound system that's proven system. And so the path of least resistance right now on the market, it may baffle us, but it appears that the path of least resistance, at least for a little bit longer, is to the upside. And with the active trend trading system, folks, I want to remind everybody that I follow the 5 pillars of active trend trading. We share with our members what to trade: top quality IBD growth stocks and index ETFs. When to enter, we provide the enter points, the exit points, and what strategy we'll be using and what to expect in our training aspect. The active trend trading system, that's the basis by which the different strategies that we utilize is done. We've had a lot of focus this year on the wealth building income strategy, strategy number 3, and we are now getting more into the stock and index ETF, which I'll be covering here in a little bit. Here's where we finished the week. We find things have finally fallen into place and have been moving. YY Trade, here's some of the highlights from this week. YY Trade took partial profits when it hit the 59.50 level yesterday. And so we've taken a little bit of profits there. NOAA, we entered a position at 30.20 this week, and it was up. It was now up about 6%. That was when I wrote this slide. CBM, 49.40. It was up about 2.2. No strategy, 2 trades this week, and I'm waiting for some setups with this strategy number 3, early warning alerts. We have sent out for the early warning alert folks some new updated videos on how it's done year to date, and some of the things, the other pieces that Mike Traeger and I have done to provide some enhancements there. So setups, here was a strategy 1 trade, and the premium members received an alert, and both an email and a text alert yesterday morning to set up this trade. And the trade was basically to attempt to enter, right, as it was bouncing off the 8-day moving average. So it's long. Our trigger was we had a close above the 8-day moving average, and that was here. Attempted to get in here and then reset the order. So we got back in on 11/19. On the pullback to the 8-day moving average, we filled at about $30.20. Our T1 is up. That'll be a 10% move. Is up at 33.22, and we placed a hard stop at a 4% loss at 28.99. One thing that's nice about taking the bounces off the 8-day moving averages is that you can afford to use a smaller stop loss. Those of you who do follow the IBD systems, they always are using a 7 to 8% stop loss on breakouts because they need to give the position more room to breathe. But if we're taking these alternative entries off of a defined quantitative point, then we can afford to use a smaller stop loss than a breakout stop loss, because if the support fails at this lower level, you'll know it much more quickly. And so this is one of the strategies we used last week. And then starting in January 2016 and going into the end of this year, we're going to be focusing training sessions on and also be doing some small groups that we're working on the details on that. That'll be about 10 persons per training session. Training sessions will last somewhere between 6 to 12 weeks. More details to come on that. The early warning alerts have been posted to, updates have been posted to the website and YouTube. And then here's one of the things that really intrigued me, and this is part of what we covered on the Wednesday night training. Last month's, or actually this month's Bay Area Moneymakers meeting, we had a really solid trader, Lee Tanner, some of you know him, gave a presentation at the Bay Area Moneymakers, and what he was developing is the aspect of portfolio management. And it really intrigued me, and I started going back and I said, well, okay, this seems like it's a missing piece with the active trend trading system. And we all, basically Mike and I discussed it, and both he and I concur that the longer term wealth building is really developed through being able to hold on to a position and then let the system take you out, but at some point you need to shift over to a longer term frame perspective. And one of the other things that we identified is not having the proper size position and not having the ability to pyramid in to a position. So I've started doing some back testing. This is preliminary only. And I just basically took the first 5 stocks off the first IBD 50 list at the beginning of 2015, which those of you who have heard some of my presentations on, fish where the big fish, swim, which is what I've found in doing research on the IBD 50 and the IBD 100 before it, is it always has provided winners. The IBD 50 list has always provided winners that you can latch onto and then ride for a while. And so as you can see, and I just used some simple rules on this particular testing is using the 8-day moving average as your trigger, the similar that we showed on the NOAA trade. And then if you get then a second trigger off of the 8-week moving average, and you just use your 8-week moving average to trigger your exit. And what I was trying to do is fill up, and this is what I got from Lee Tanner, fill up a portfolio and then just let it work its way out. And selecting, like I said, the first 5 stocks on the IBD 50 list, but just writing those on a $100,000 account that was marginable, the backtesting generated this nice little, gain through this time of year. Now, this is not a promise that, this is what we're going to be able to do totally going forward, but what we're seeing is that's it appears to be the mechanism by which a person can really start generating some longer-term wealth. And so this is where we're going with strategy number 1 with the active trend trading system. So in January, we will, if you are already a member, a premium member, and an early warning alerts member or a basic member of active trend trading, one, you're locked in at whatever rates you're currently in right now. But for new members in January, we will have an increase in membership prices, but you can still lock in right now at the discounted rate for the active trend trading membership and or the early warning alert system. And you can find out more about that at this website right there. So anyway, that's all we have. You know, it's kind of interesting. That went a lot more quicker because I guess there were fewer people talking. But we're going to get in and start looking at some individual stocks here. But I want to, say, you know, see you not next week because it's the day after Thanksgiving. And so, Judy, because the discount is so significant on both services, the answer is you can combine them, but one is a yearly membership and the other, the ATTS, is a monthly. So anyway, we're going to be back on, let me look at my calendar here. I'll be back on December 4th to have the next show. Please enjoy the time off this weekend with your family, and so have a great weekend. Have a great Thanksgiving next week, and let me show you what I'll be doing as we move in. And it's Turkey Day, and for me, it's football day. And so I missed the time when the University of Texas would play Texas A&M on their annual Turkey Day football game, but that's okay. And so, Eric, I knew you were going to ask that. And so that's it for the primary webinar. Now let's get in and look at some individual stocks. And if you want to ask any questions, I will be doing a slight recording on the research that Mike and I are doing on the longer term parts of strategy number 1. And we'll be sharing that also and getting that posted. So, okay, let's go to the charts. Okay. Where'd you go, Eric? There we go. REGN. And Eric had sent me an email and asked, you know, what would have been the triggers to get us into either one of these trades. And as you can see, Eric, I actually went in and looked at this prior to, and it depends on your time frame. I'm assuming you're saying, you know, just here recently. And so utilizing the active trend trading system, what I'd be looking for is a couple of things. One is we had a close above the 8-day moving average here. Now, it held the 8-day moving average there, and so that could have been a trade bouncing off of this level. And as long as the move from here to here was less than 4%, you would have still been in that trade. Another mechanism, depending on when you're looking at it, that's why it's good to have both the daily and the weekly charts up, is we have the 8-week moving average. Now the price action on regional has been above the 8-week moving average now for 1, 2, 3, 4, 5, 6 weeks. And what we've seen and what we'll learn, and if you do have a chance to review that training session on the website, is any pullback to that touches the 8-week moving average, that level could provide us a secondary entry point, because as you see, once we launched up here, we went back above the 8 here. Over the last this many days, there has not been an entry point because it's too far away from the 8-day moving average. So I'm hoping that that is what you were after with regards to how to do that. Another aspect of here is we broke back above. Now this could be a secondary entry point, but it broke back above this little flag line here and bounced up. But if I drew this level here on my weekly chart, it would show up over here and it would say, oh, I'm back down into this level of support formed by the 8-week moving average. I can be looking for a potential trade. Now my question is from here to here. Okay, that would have been about a 2.95, maybe a 3% retraction from here, from the 8-day here down to here. And so if somebody would have taken the trade here, you would have still been in the trade. Does it make sense? Does that work for you, Eric? Okay, and then on the other one, sorry, I had to go, I promised Eric that I would go into really strong details on exactly what was going on there. This is American Health Care or something like that. And yeah, American Healthcare Services. Did you guys hear the here? And so, Tracy, if you want to send me an email on that, we can chat about that. Basically, the answer has been no for a lot of different reasons. Because on the monthly membership, that way you can cancel the monthly membership at any time, and the yearly membership is tied to a little bit of a guarantee on performance, our performance, and so that's why it's a yearly membership on the active trend, on the early warning alerts. So here, oh gosh, this chart is such a mess. Sell-off, as you can see, it has stayed below the 8-week moving average all the way down. A little bit of moves up and pops up. There could have been some potential moves when it dropped back down. It moved back above the 8, but you have to recognize I'm below the 50 at that time. And so anytime we're below the 50, the entry has to be cautious, but you got to pull back to the 8 here. That would have been an entry. And then where do you sell? You'd have a 4% stop loss there. And the move from here to here was about 14%. And then what would be the initial sale point? Well, it would be the sale point would be a break below the 8, or not a break, but a close below the 8, and that would have been a real not a pleasant trade at all. And then you get your second area here. We move above the 8 here, touches the 8 here, so one could have got in long here. This would have been freaky because that was earnings, so I would have probably stayed out of that trade simply because I'm in a downtrend right now. I'm in a downtrend. But we are starting to see a little bit of scooping here, but American Healthcare, the chart doesn't look real well. So let's see, what do we got here? FEY, FireEye. What's going on with FireEye? It's in a downtrend. Until it breaks back above and reverses that downtrend, you'd be looking at this particular trade for for short trades. And let's see, working my way down, CRM. Excuse me. Okay, nice breakout. This must have been an earning breakout. What kind of so CRM. Is this Workforce? No. Who is this? Yeah, Salesforce. Okay, they're close here in the Bay Area. So we got a breakout. It had been a nice little uptrend going forward, and so now we, would basically, I would be waiting for some kind of a retracement and waiting for the moving averages to catch up for it. And as we see, and also to see if this 80 level or the 79 level holds. But it did break back above resistance, and so that's a positive thing. CRM had been a really big mover in past years. Has been a big mover in past years, and it may be regaining some of that power. It's been in the news here lately, and some articles written on IBD, so that's a great place to check it out. And also check out what it's doing with the with its fundamental analysis. I always do a stock checkup to make sure a stock that I'm going to be trading meets the criteria of being a strong IBD quality stock, because we want to focus on trading the best, and we ignore the rest. If it doesn't meet the criteria of being a strong, fundamentally strong growth stocks, you pass. I mean, just that simple. Let's see what we got going here, Tracy. Make sure I'm getting every CRM, ADM. Do we? It's a downtrend. Archer's Daniel. Oh. Now, one of the things we don't know on this, who did? Okay. Yeah, one of the things we don't know, Scott, is this an exhaustion type move here? I mean, it's selling off pretty heavily. And so at this point, I mean, this would be on my short list and waiting for a pop back up to the 8 to trade it back down the other way. Because that's one thing nice around the 8-week and 8-day moving averages. They trade in both directions really well, and the rules are basically the same. They're just flip-flop, one to the downside, one to the upside. But yeah, this is looking really, really weak. You would be bottom fishing if you went after this stock right now. Oh, that's not it. Excuse me. WHR. Sometimes I get going too fast here. Whirlpool, long-term favorite. Looks like it's trying to work on a base over here. And it's getting a little bit of an upside move. Volume on it is average over a little bit over 1 million shares. Again, I'd want to run the stock checkup on it, but if you're a Whirlpool kind of person, you can also take this line here, as that's the downtrend slope. It Pinocchioed its nose above the downslope line there, and then fell back down into a downturn. It's looking a little bit constructive in this area, but again, there may be better things to trade out there. Target. Again, has been in a downtrend, a huge earnings move for this week. Had earnings yesterday? Looks like it fell out of bed with earnings. So right now, Target, great stock to put on your short list. Okay, CBM. CBM is a stock that, yeah, Tracy, to answer your question on, if you missed the position, getting in the position yesterday on the pullback back to the 8-day moving average, you can roll that trade forward, just like we rolled the NOAA trade forward. If you missed the first one, because you never know which one's going to totally take off, but we get another bounce off the 8-day moving average today. So you could have, literally put in another trade with the same type of setup. That would have been allowable, and that would have just been, looking at it and saying, okay, if it pulls back to the, the 8-day, or in the proximity of the 8-day, and I think we covered that on Wednesday night. If it's between, the proximity is somewhere between 25 and 50 cents, depending on the size of the individual stock. In CBM, since it's a lower price stock, you could go 25 cents. If you get within 25 cents of where the moving average is, and that's typically on the day before, because you're never not going to really know if you're setting up your trade the day before. You're not going to know exactly where the 8-day moving average is going to be. So that's what that's the way you would set it up. Let's see what else we got here. How are we doing on time? Oh, we're good. Make sure I got it right. Yes. Give me 1 minute. CBM Lilly. Yeah. Now, did you guys read some of the news that United Healthcare is considering pulling out of the Obamacare exchanges after next year because they basically said they are just getting whacked on their bottom line. So I find that kind of interesting. And if one goes, then there could be a domino effect there. So Lilly's working on a nice little, part of an uptrend. The right side of a larger cup. The government subsidies in this year. Yeah. It's interesting to see how businesses change when the government subsidies in. Let's see, Scott, on Lilly, again, I mean, it's an old-time favorite, but I think you'd want to run the stock checkup on it on the IBD list, because you take a look at this, and as you can see, this range is working is about a 20% range. There may be other things or better things to trade. On a purely technical basis, though, is we're getting a shooting star today. Must have had okay earnings, got this move up, but you'd be looking for the 8-day to catch up with it, or a retracement back here to the 8-week moving average to plan your entry if you wanted to trade Lilly. Is the system a stop on? Okay, I mean, is the system? Oh, okay. AMBA. Yeah, AMBA is making a little bit of a pre-earnings run, and so I'd be looking, Judy, at one of the areas, depending if when you got in, you can definitely look at a close below the 8-week moving average would be a reason to get out, or a close above it could be a reason to get in. CBI. And so let's take a real quick look, run over here to what's going on with YY, who has earnings on Monday. Look how these longer term moving averages, this is the 200-day moving average up here. Look how well that is it has functioned as a level of resistance on YY. So YY has made and pushed back above the 60 level, which was resistance. But it's fainting when it gets to that level of resistance, now up at about the 60-50 level. Now we have modified our exit on this, that if in fact it does hit up about 62, 62.20 to 62.50 is based on this level of resistance that's shown on these candlesticks, that would be good enough to be able to jump out. Okay, what else we got going on here? We open a position in NOAA. And it appears that NOAA is trying to push higher. And again, this is a perfect example how we pulled back to the 8 last week. One could have taken a position, and we did take a position. We got in yesterday, and now if we can break out above the 3302 level, we will be able to take out 10% gain at 3320, or approximately 3320. And so, Yeah, CBM on the Eric asked a question is 50% lower volume than normal. Today is still a buy based on the 8-day. What I do is I base my buys off the technicals, and then if it triggers a buy signal, then I look for volume to kick in that gives us further confirmation to kick in within the next few days after jumping into the trade. If it doesn't kick in, it potentially means that there is just a flaw, but I don't try to overthink it, Eric. I just I go off the visuals. If the volume then kicks in and supports that, that's awesome. And sometimes it does, sometimes it doesn't. And then, yeah, CBM is, how's it doing? Again, took the trade off the 8 yesterday, and it actually showed it was going to fail. And it too has a level of resistance about the 5064 level. So if it pops above the 56, that level, the 5064 level, then we're probably going back up to these highs and hopefully on up and break out from there on closer to the 54 level, which corresponds to these highs over here. Okay, looking at a couple of more stocks. Okay, Susan, CBI. Chicago Bridge and Iron. I would need to run, now clearly as you can see from these trend lines, I've looked at this stock before, would need to run the stock checkup on them. But from a purely technical standpoint, it looks like it is forming a nice little consolidation base here. It got past earnings without dying, which is a good thing. And then it's series of higher low, higher high, and we'll see if it rebounds and takes back up above the 50. We were talking about why I don't like to hold over earnings, and here is one of the reasons why. Mint. Mint had been on the IBD 50 list, and I think maybe the leadership board. Now it would have been great if you would have bought down here, but as you can see, well, what would have been your return from here to here? It's only about a 9.8% gain, and with only a 9.8%, I make 10% kind of my benchmark. If I'm not up more than 10% prior to going to earnings, I close at least a portion of that position because this doesn't feel very good. And when that kind of things happen, you just kick yourself in the butt for why didn't I take a little bit of profits here? And again, I use the 10% rule, it's a rule of thumb actually. But even 10%, how much of a dive is that? Yeah, 32%. So if I would have closed half my position here because I was below 10%, I would have actually closed all my position if I was below 10%. But if I'm above 10%, 10 to 15%, I'd probably close half the position. Just so these kind of things only have to happen to you a couple of times before either one you learn, we traders learn our lesson, or we don't have any capital to trade with again. Okay, CBI. Did we do CBI, Susan? We did do CBI. Okay. Okay. SLB. Schlumberger. Is that a Schlumberger? It is Schlumberger. How about that? Daily chart's looking kind of interesting. And again, I would go back and just double check. It does it. I do the stock checkup on it just to see if the fundamentals on this stock warranted getting into it. As you can see, it is in a downtrend. You can't, and it got right up that downtrend and turned back around. But it's looking, I would say, kind of interesting in that, okay, higher low, back into a support level, and now it's bouncing back up. It is closing, it looks like it's below the 8-day moving average here, but it is moving back above the 8-week moving average, and so I would say that from a technical standpoint, it's kind of a toss-up. Visa. Before I do Visa, no, that wasn't what it was. EMA, MasterCard, and Visa used to trade in tandem pretty nicely. And again, I have not done MasterCard, trading MasterCard back about 7 years ago. It actually paid for my son's wedding. So I kind of like to keep an eye on both of those in tandem. So anyway, let's look at Visa. Visa has been on IBD 50 list, and I think it's also on the IBD leaderboard. And right now, Susan, it looks like it has made an really nice run, made it through earnings, gapped down after earnings, but then immediately reversed back up and took back off. Hasn't, other than early on, hasn't really given a lot of really good entries. I mean, some of these could have been good entries in the pullbacks to the 8 or the approximation of the 8. And then you get your rebound, and it's over the last 2 weeks, its price action after earnings has gotten a little bit sideways and a little just like it's confused. It doesn't know for sure whether or not it wants to move a lot higher or just kind of stabilize right here. You can lay in a line in the sand, basically is based off of that breakout there, which was this past swing high from back in July. And see what kind of rebound here. But because these are $2 to $3 moves, it did a stock split, back here 4-to-1. So I understand Visa is trying to expand its presence in China, which could be very kind of an interesting situation. CBM. SKYW. Judy, are you looking for Skyworks? No. What is this? What is this? SkyWest Airlines. Again, I want to run the stock checkup on it to make sure that its fundamentals were okay. From a technical standpoint, it needs to break out above here. Earlier, last week after earnings, it gave some initial indication of being able to jump in. If you would have jumped in here or on this pullback, you would have probably still been in the trade. Let's see. Yeah, pullback was about 2.63%. And now it appears to be taken up. Volume, okay. Close to the, not a lot of buying, but it's okay. From the aspect of, it looks like it's starting to pick back up. So, IBB. Biotechs. On a weekly chart, biotechs have been having a lot of volatility, and I don't trade any of the ETFs other than the index ETFs, and sometimes I'll trade the VXX, which is the volatility ETF. But the biotechs, it did some nice consolidation here, and it looks like it's starting to work its way back up. Set up a nice little uptrend here. We get a higher low, well, higher lows, broke above this high for a higher swing high, and now it knows to retake that, take that position out, or this point out here, to show that it is continuing on into its uptrend. From a longer term standpoint, you're getting your first pop or second pop up above the 8-week moving average, and it's starting to turn back up. So it could be potentially in the early stages of a righting itself. But at this point, you got to still consider it is in a downtrend. Oops, extend it the other way. There we go. Oh, come on. Yeah, it is trying to stick its head up above it. Okay, folks, I'm going to do 2 more, maybe 3, and then we're going to call it a day. DY. DY is looking interesting, but it's got earnings coming up on the 23rd after the market. So I wouldn't be doing anything with DY until after earnings on Monday. LXFT. Yeah, Eric, one of the things on LX, what is Luxoft Holding. Low volume, very low volume, it's less than 500,000 shares, and I try to keep, I don't jump into a lot of things that are under 500,000 shares. There may be exceptions, such as the exception I made with CBM, but I've got to have some really good reasoning to do that. Again, I would have to run the stock checkup on that to see what its fundamentals are like. CYBR, Tracy, you get, okay. Tracy, right now, it's in a downtrend, as you can see. CYBR would be on my short list. Let me draw a line in here. And so I'd be watching for, that's a perfect example of how the 8-week and the 8-day moving average can work in similar ways. Is right now in a downtrend, look for the 8-week moving average to be a line of resistance until it's proven different. So this is a low. While one could take, look at, the potential, hey, we did break above the 8, and you've got it's really extended away from the 50 with the anticipation it may run it back up to the 50. Well, how far is that going to be? It's going to be about a 13% gain. But there's other stocks out there that may provide you a bigger bang, better opportunity. So with that, folks, I am going to call it a day. I'm going to take one more look at our buddy Noah. And this may give us a little spurt into the end of the day, and we can take profits on it prior to the close of business. So with that, happy Thanksgiving, everybody. Have a wonderful time. Please enjoy your family, your friends, and of course, if you're a football fan, enjoy your football. God bless everybody. Bye-bye.